bemused and confused by an ongoing conflict in the silver arena. On the one hand, we have had general consensus that the amount of silver left above ground has been diminished drastically, and the cost of mining has also increased drastically. The amount of silver being consumed in industry has grown exponentially, according to most pundits. Governments and private miners are still producing enormous numbers of silver coins and stamped bullion bars for sale. So therefore my question is twofold. How long will the powers that be allow silver coins and bars to be minted? And if so, do they stop mintaging of coins? What will happen to those, like myself, holding various amounts?
Oh, great question, and it's part of the confusion in the silver market. It's partially right, so I'll do my best to make this succinct. From 1990 to 2007, we were in a silver deficit. We used up 1.5 billion ounces of silver above ground. So the supply of silver above ground in 1990 was 2 billion ounces. By 2007, it was 500 million ounces. Again, 1.5 billion ounces was used up during that time frame. So from 2000 roughly until present day, the amount of silver coming out of the ground has risen not exponentially, but it's been substantial. And the amount used by industry has grown linearly, not exponentially. So the above ground supply of silver has actually grown. So there's more above ground supply. So let's go back and use the numbers. The amount of silver above ground that hit its low mark in 2007 at roughly 500 million ounces of silver in bullion form, and probably about 500 million or slightly more in coin form, for a total of 1 billion. Right now, from 2007 to 2012, 5 years later, we have about 1 billion ounces in bullion only and about 1 billion ounces in coin form. So we have 2 billion ounces. So now in 2012, we're roughly well, we're at 2 billion ounces now. Sorry, I got to go back and explain that the 2 billion ounces above ground in 1990 was bullion only. So we've got half as much bullion, but a lot more coinage that could be converted to bullion in 2012 than we had in 1990. So the point is that the silver supply has grown over the last several years, not diminished. That was a fact for 16 consecutive years, but it is no longer true, and it was no longer true as of 2007 onward. So that's the reason that there's the ability to mint. And there's a lot of people that recycle silver. I mean, silver is recycled at the tune of almost 200 million ounces a year. A lot of it does end up in the landfills. That's another misunderstood thing. I got a woman at a conference one time, and she wasn't really mad at me, but she was explaining to me that silver isn't recycled. I said, I'm sorry, ma'am, but it is. It's recycled to a great degree. A great deal is not, but a great deal of it is. So I hope that clarifies it, because, again, this is one of those type of questions that unless you pay me for my work or read everything, I think this is probably in the public domain somewhere. I've written so much for free, but that's the facts. So, and then if that worries you, say, oh my goodness, silver isn't in a deficit anymore. They're actually adding to the supply year after year. If that bothers you, think about this. There's roughly a 6-month supply of bullion above ground right now, maybe a little bit more. But there's a 40-year supply of gold above ground. So if you're going to worry about how much above ground supply there is of the metals, and you consider them both to be monetary metals, then I would be much more concerned if there's a 40-year supply of gold above ground, and there's only maybe a 6-month or longer supply of silver above ground. So I'll end on that.
If the metals market is being manipulated down, how can precious metals ever move up? Money printing such as QE, Operation Twist, etc., would seem to allow for a great rise in price as global fiat devalues paper money. How do you lose control of the manipulation?
Yeah, well, I believe that the market is manipulated, but again, I've gone on record many, many times. First time at the Silver Summit several years ago, when Al Corlin got, I think, 4 of us up on stage and asked that direct question. And I stated then, and I continue to state, the market cannot be manipulated for the long-term trend. The long-term trend is up, and that's why the price is much higher now than it was in the year 2000. Because you cannot manipulate the price day after day after day. If you could, silver would still be at $5 or lower. But within that trend, you can smash down the price again and again and again, and that's what's taken place. And when you do that, a lot of people that are on margin lose faith, so they get taken out of the market, and a lot of them never return, and they hate silver, or they hate me, or they don't like whoever wrote about silver got them in the first place, which is their own idea. even though maybe they read me and that was an impetus to do it, or Mike Maloney or whomever. Regardless, the point is that the trend can't be manipulated, but within the trend, certainly it can smash it down and it can cause a psychological shift. And could you read the second part of the question, because there's more to it than that?
How do they, in quotes, lose control of the manipulation?
Oh, great. Yeah, that's the most important question. The only way I've seen and I've written about and talked about for years is that the way that it gets lost is that paper doesn't equal silver. So basically, everything that sets the price, everything you hear about is based on a derivative. It's a derivative of the physical silver market, but not the physical silver market. Again, if we look at history, the physical silver supply at the bottom of 2008 was very, very tight, and was really a shortage in, again, the retail market. The silver rounds, silver eagles, silver maples, 100-ounce bars, 10-ounce bars, those type of things. So that's what will happen, and I think it will happen, that you'll have the inability of the paper market to meet the demand of the physical market, because paper doesn't equal physical. So once that happens, I think you could have a real feeding frenzy, because what will take place is monetary investors will be buying physical metal, and industry can't use paper through their processing plants either. I mean, Dow Chemical, DuPont, Mitsubishi, Apple Computer, all these companies that absolutely 100% have to, must, it's an imperative, have silver, will see that the supply is drying up, and they don't carry much inventory. They carry some, but not a lot. And so then there'll be two demands on silver. Or there'll be industrial demand and monetary demand, and that'll feed on each other. So once that happens, and I wish I knew when, I tell you to the day, if I knew, no one knows. That is what will break the manipulation. So what you'll probably see is what you saw in 2008. You see a price if you want silver, and you see a price in the futures market, and they won't match. And there'll be a very good reason for that. Paper doesn't equal silver. I know I've said it 3 times, but repetition bears memorization.
It is a known fact that all major banks have held excessive short positions on silver for years now. Do you know how it is that the SEC do not take them to task over this blatant market manipulation? And is there any chance they could be squeezed into covering those positions simultaneously?
Well, there's a couple of presuppositions there that we all know that. And I would argue we probably don't all know that. First of all, the SEC is probably not their purview. That's an equity situation. So it's probably the CFTC, and of course that's under investigation, so that's kind of a crummy answer for this person that asked. But we don't know their total position. I've had this discussion with Ted Butler at times. They could be, we know pretty much from the bank reporting that Ted was the first to bring to the fore, and I commend him for that. But also the community of traders, which again Ted was probably above anybody as far as bringing that to the attention of all the metals heads, all the silver and gold investors. Nonetheless, all we know for public is what's in the commitment of traders in this bank position reporting. What we don't know is what the over-the-counter positions are. So for an example, you could be Bullion Bank A, and Bullion Bank A has a net short position in the commitment of traders report, but they might have a net long position through a foreign bank, some other bank, and their net position is actually long, not short. And now that is a fact? No, but it certainly could be the case. So we don't really know what their true positions are. We do know what they are publicly, but that doesn't mean that's their total position, because these other positions they don't have to report. As far as the SEC, it's out of their domain, and as far as the CFTC, well, I've already kind of answered that at the beginning of this interview, that I really don't expect anybody at that level to really do much of anything meaningful. I hope I'm wrong. I hope I'm surprised. I hope they come out with something that's extremely accurate, pertinent, and has some teeth in it, but again, I doubt it.
What is